In a recent campaign speech, Donald Trump promised to eliminate Social Security taxes for seniors. Let's take a listen.
Remember this, I will cut all of the bad talk about Social Security. They're going to destroy your Social Security, but I will not cut 1 cent from Social Security or Medicare. And I kept my promise for 4 years, and I will keep it again. And seniors should not pay taxes on Social Security. And they won't. They won't.
Okay, so if Trump gets elected, he's going to wipe out the tax on Social Security. So if you're currently drawing Social Security, or will be by then, what exactly will this mean for you? How much will you save? For starters, let's take a quick look at the calculations that go into Social Security taxation so that you can understand how meaningful this tax reprieve might be for your personal situation. To understand Social Security taxation, we must begin by defining a concept known as provisional income. This is the income the IRS tracks to determine how much of your Social Security will be taxable. What counts as provisional income? Any 1099s from your taxable investments, any distributions from your IRAs, any work income, any interest from municipal bonds, and 1/2 of your Social Security. Okay, now that you know how to calculate your provisional income, how do you figure out what percentage of your Social Security will be subject to taxation? Well, the IRS provides a matrix to help you figure this out. If as a married couple you have less than $32,000 of provisional income, then your Social Security will be 100% tax-free. So in this case, Donald Trump's tax reprieve wouldn't help you. However, if your provisional income is between $32,000 and $44,000, then up to 50% of your Social Security can become taxable to you. And finally, if your provisional income is greater than $44,000, then up to 85% of your Social Security can become taxable. Now, I have to note that the key word in all of this is up to. So what the IRS is really telling you is that a whole range of your Social Security could end up becoming taxable. That means anywhere from 1% of your Social Security all the way up to 85%. In other words, it's impossible to look at this chart and be able to eyeball precisely how much of your Social Security will be taxed. It just isn't that simple. And at the same time, it's impossible to know exactly how much you'll be saving if Trump eliminates Social Security taxation by simply looking at this chart. So for those of you who really want to figure out what portion of your Social Security will become taxable and therefore what Trump's proposal might save you, the IRS has a long form that you can fill out. And that form looks like this. So a little intimidating and not exactly clarifying. There's a lot of add this line, then subtract that line over and over again. There has to be an easier way, right? Well, happily there is. You can find any of a number of Social Security taxation calculators online that will do all the heavy lifting for you. But what I've done in this video is make it even easier for you. I've gone through all the different levels of provisional income, and I will tell you how much of your Social Security will be taxed based on those levels. And I also tell you the rate at which you'll pay tax on the taxable portion of your Social Security. Okay, before we go any further, let's discuss another term, standard deduction. This is the tax deduction you receive in retirement if you choose not to itemize. If you retire today as a married couple younger than 65, your standard deduction will be $29,200. That means you can realize income from any number of sources up to $29,200 without paying any taxes at all. And if you're over age 65, the IRS throws in another $1,550 for you and $1,550 for your spouse for a total of $32,300. And since a lot of people draw Social Security when they're 65 or older, we'll be using that standard deduction for today's example. The reason I bring up the standard deduction is because even though the IRS says that if your provisional income is between $32,000 and $44,000, then up to 50% of your Social Security can become taxable to you, there are some scenarios in which you wouldn't pay any taxes at all. And that's all thanks to the standard deduction. And in those cases, Donald Trump's proposal wouldn't save you any money at all. Here's an example. Let's say that you're married and filing jointly. Your joint Social Security is $40,000 and you're withdrawing $20,000 from your IRA. That means that I have $40,000 of provisional income. Well, first we figure out what portion of your Social Security is going to be taxed. And according to the online calculator I like to use, 10% of my Social Security will be taxed in this scenario. So 10% of $40,000 of Social Security is $4,000. So $4,000 of taxable Social Security plus $20,000 of IRA distributions gets me to gross income of $24,000. And when I apply my $32,300 standard deduction, then my taxable income is precisely zero. So in that scenario, you wouldn't pay any federal tax or Social Security tax, and Donald Trump's proposal in that scenario wouldn't help you at all. The same would hold true if I were to have $40,000 of Social Security and draw $25,000 from my IRA. No Social Security taxation and no federal taxation. And once again, no savings under Trump's proposal. However, if I have $40,000 of Social Security and a $30,000 distribution from my IRA, then all of a sudden I'm showing up on the IRS's radar. Let's do the math. If my provisional income is $50,000, that's my $30,000 IRA distribution plus half of my $40,000 of Social Security. Then the Social Security calculator tells me that 28% of my Social Security becomes taxable to me, or $11,200. When I add $11,200 to my $30,000 IRA distribution, then my total taxable income is $41,200. So once I apply my standard deduction, then my taxable income is $8,900. So that puts me in the 10% tax bracket. So 10% on the taxable portion of my Social Security is $1,120. Not the end of the world if you ask me. So, assuming you have $40,000 of Social Security, let's watch what happens as we gradually increase distributions from your IRA in $5,000 increments. At $35,000 of distributions, your total provisional income goes to $55,000. At that point, 38% of your Social Security would be taxable at 10% for a total Social Security tax of $1,520. As you can see in this chart, as you continue to increase your IRA distributions and therefore your total provisional income, the percentage of your Social Security that becomes taxable quickly begins to rise. And it's important to note that it's not until you reach around $85,000 of provisional income that 85% of your Social Security becomes taxable to you. So some people mistakenly assume that once you hit $44,000 of provisional income, that 85% of your Social Security immediately becomes taxable. Not so. As you can see in this example I used today, you don't reach the point when 85% of your Social Security becomes taxable until you hit around $85,000 of provisional income. Now, what can you do to protect yourself from Social Security taxation if Donald Trump doesn't end up getting elected, or he does get elected but fails to eliminate the Social Security tax for seniors? Well, the good news is there is something you can do: a Roth conversion. Why is this? Well, any income taken from a Roth IRA does not count as provisional income and therefore does not count against the thresholds which cause Social Security taxation. Now, I wouldn't necessarily do a Roth conversion simply because you want to avoid Social Security taxation. You must believe in your heart of hearts that your tax rate in the future is likely to be higher than it is today. That should always be your primary justification for doing a Roth conversion. However, if by doing a Roth conversion you put yourself in a position to receive your Social Security 100% tax-free, then that's certainly a nice added benefit. By the way, how much would Trump's proposal cost over the next 10 years? Well, according to the Committee for a Responsible Federal Budget, it would add between $1.6 and $1.8 trillion to the national debt over the next 10 years and accelerate the insolvency date of the Social Security Trust Fund by over a year. In summary, the IRS doesn't exactly make it easy for you to understand how much of your Social Security will be taxable and at what rate, but here's the good news. If Donald Trump eliminates this tax for seniors, you may not have to worry about it ever again. The bad news, of course, is our country just can't afford to do it unless we make commensurate cuts in some other area of the budget. Folks, my upcoming book, The Guru Gap: How America's Financial Gurus Are Leading You Astray and How to Get Back on Track, is now available for pre-order on Amazon. Take the opportunity to order your copy today. By the way, in the next 10 years, I'm looking to put 100,000 Americans on the road to the 0% tax bracket. If you would like some help implementing a balanced, comprehensive approach to tax-free retirement that shields you from the impact of higher taxes, head on over to davidmcknight.com and click on the Connect with an Advisor button. I'm happy to refer you to an advisor in the Power Zero network that has been trained, vetted, and qualified personally by me. If you're a financial professional and want to learn how to become a certified Power Zero advisor, head over to powerzero.com and opt into my free video series. And if you have any comments or questions, feel free to drop them into the comment section below. I'll respond to every single one of them personally. And don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.